Alright, welcome back to another accounting video. So today we're going to be building up on the journals. So this is going to be part 1 of 3. So I'll just go through the 3 parts. So the first part is going to be the journals. That is today's video. The subsequent video will be about how this ties into the balance sheet and calculating specific accounts. And then the third video is we're going to tie in the income statement and cash flow statement. And that's pretty much going to take us through to the end of Unit 1, because a lot of work is around that. And I might try and get some worked examples in there, but that's sort of where we're heading. But more in particular for today's video, we're going to look at 4 journals. Those 4 journals are the cash payments journal, the cash receipts journal, the purchases journal, and the sales journal. And we're going to look at, in no particular order, each column, some tips and tricks, where to total both per transaction at the end of the month, anything around source documents, our GST rules, and the date. So what happens if it's the same date? So let's jump into our first journal, which will be the cash receipts journal. So we're going to start with the cash receipts journal. You can see on the screen here, and we've got transactions on the 1st of March, 8th of March, 19th, and 26th. And we'll just go through. So the first one was the date we just went through. The details is what it is for. And you'll notice for the 1st of March, the 8th of March, and the 26th of March, what's in the details matches the painting fees column. And that is okay. If it's just a sale, you can write sales. You don't have to go into elaborate detail. You can just say painting fees, and that will suffice. We also have here, you can see the painting fees is $1,600 for the first, and then GST is 10% of that. So the GST will be tied to painting fees here or other fees, because that's a good or service, in this case a service. So GST is always 10% of painting fees. But interestingly, if you go down to the 19th, the capital contribution is just $700 cash and no GST. So that is something to be aware of. Now, let's look at the first again. We can see here painting fees $1,600 and GST $160. But if we look at bank, we can also see it is added together to reach $1,760. And this applies all the way through for the 8th, 19th, and 26th. So your bank is essentially the total, and it'll be bank equals painting fees plus sundries plus GST. And that applies for the cash receipts journal across the board. For all the columns need to equal bank. And we can apply that the whole way through. Now, if we go down to the bottom, we see totals at the end of March, and we see bank totals 5,210, and that is just adding everything in the bank column together and putting in there, likewise for painting fees, likewise for sundries, likewise for GST. So it's just adding those columns and subtotaling. And if we add them across, we also see we get to 5,210. So it follows that same rule. Now onto the order of documents, or source documents here. It's just EFT and bank statement, but you need to be really paying close attention, making sure if it's EFT, you do put the term EFT in there. And for capital contribution, it just says 7, but that could have been a receipt or an EFT as well. If we move over now to the cash payments journal, we can see there are a lot more. Most, if not all of the time, the first thing is the cash payments will always be larger than the cash receipts. And it very much follows the same set of rules. So for example, wages here, 1,000 doc 101, and that's probably a check. and you see 450, and if we add the wages, drawings, painting, sundries, and GST for that row, we see wages is also 450, and it adds up. Likewise for cash drawings, where it goes in the drawings column. And then if we look at new equipment, this time we purchased a good or a non-current asset. That's still a good. And we incur GST this time. So that's just something I want you to be aware of. It follows the exact same process. But then if we keep scrolling down, we see the totals, and the same principle applies of the $5,000. Because it's adding up everything on the first all the way down to the 30th. Likewise for wages, likewise for drawings, paint, sundries, and GST. Just going through, you can see those adding up there right away. In terms of source documents, here doc is, if that 101 would be a check, the ATM for the 5th would be an ATM withdrawal, and EFT would be like paying BPay, for example, or electronic fund transfer. So making sure when we get a sum, and this will show up in the worked example, it's making sure we read the information closely. Now, if we go over to the sales journal, we can see that again, the same principle where fees and GST, but this time instead of the bank being on our left side, it's all the way on the far right and under total accounts receivable, because if we see we got fees, that's for sales we made, we then have to charge GST. If you add up 720 and 72, we actually reach 792, and that pattern repeats itself the whole way through. And we only use invoices in the sales journal. And I will come back to this because I do want to compare the sales journal to the purchases journal. But again, we add it the whole way across, and the same rule applies. As long as you add it across and the total accounts receivable gets the total, it'll work. At the end of the month, you add down into the total column, and we can see the math works out, because in this case, 5,630 plus 563 equals 6,193. So you can see that adds up there. Now, if we double back on ourselves, we can have a look at the purchases journal, which also, like a sales journal, uses invoices. But this time, instead of it being for sales, it's for inventory we purchase on credit to our accounts payable. And the same process applies, where you're just adding each column up. So in this case, on the 3rd, 450 plus 10% of GST, which makes it 45, makes it 495 total when you add the 450 and the 45 together. And the same applies for the 8th, all the way through to the end of April. And then we have a look, we see 2530 plus 253, because the GST gives us a total of 2,783. So it's just making sure you are doing this transaction by transaction. Don't try and rush it. Work transaction by transaction, date by date. Now, let's compare both the sales journal and the purchases journal, because we both know they use invoices, but how do we know the difference? Quite simply, if we look at the sales journal, in particular the invoice column, we see invoices are in sequential order. That's because we're issuing those. Whereas for the purchase journal, we are receiving them and we have multiple suppliers. So that means different source documents. So it's just being aware of that. Now, we're going to bring up the statement of receipts and payments, and this is where we're going to wrap up our cash journals here. You can see the cash receipts journal. Everything in the cash receipts journal, see the cash receipts column, lines up with what the totals are for the cash receipts journal in the blue, red, and green. We can see those links right there. The exact same thing happens for the cash payments journal, and we can check those subtotals of total cash receipts 5210 against the bank column of the cash receipts journal 5210. So we know that math works. Likewise, the same applies for the cash payments journal, which totals at $5,000, and we can double check that from our journal, also 5,000. So we see that right there. So basically, this statement of receipts and payments is a pretty version of our journals. Now, the last thing is, if you notice the red, the capital contribution, new equipment, van service, they are all sundries. That means each sundry needs its own subheading or own item in there, because new equipment and van service are different items. You can't just put sundries, you need to put the individual item. So that's a little thing to be aware of. Additionally, lifting up from that, we also do see that the cash surplus and cash deficits is calculated here, plus bank at start and bank at end. You get the bank at start, the 420, from the previous month, what you get given in the source info, and the bank at end you would need to calculate. So just things to be aware of there. So just making sure we read the questions is probably the biggest takeaway, and not rushing this, really taking your time. So for more accounting videos, I will see you in a future video. Later.